Hi guys, we'll start in a minute or two. Just waiting for a few more people to join. Just let me hear, please, that you can hear me. Yeah, thanks, Mary. Hi. Hi, Brian, Francisco. Hi, Jason. Thanks, guys. All right. Hi, Remy. All right, let's start. So, hi everyone, welcome. Thank you for joining me on today's trading room for the week of November 29 to December 3rd. Hi, Samuel. Just a quick disclaimer before we start. As always, this trading room, this webinar is for educational purposes only. And anything I talk about here is my own opinion. I'm not giving any recommendation to open, sell, hold, or close any position on any currency pair. Of course, use your own discretion and your own risk management, but this is for educational purposes and as always, my own opinion. Just let me know you can see the screen share, right, with the weekly outlook. Yeah, thanks, Bob. So a quick review of the upcoming week before we start going over the majors. Some key economic events for the upcoming week. So today, all these hours are GMT. So we had pending home sales, and we have some, speeches from the European Central Bank and Powell, and also tomorrow we have in China the manufacturing PMI, which is quite important to show some global economy health. The German unemployment change, CPI in Europe. That would be interesting to see what the inflation rate in Europe is, consumer price index, GDP in Canada, and some consumer confidence in the US. On Wednesday, the middle of the week when most of the news is out, we have GDP in Australia. Look how low the GDP in Australia is expected to be, and we'll talk about it. Also, when we go over the Aussie Dollar chart, I think it's going to, I'm going to show you a very interesting chart pattern on the Aussie Dollar. Well, Australia has been closed for, I don't know, a year and a half, even more, with all the quarantines there. They've finally started opening the borders, but they've gotten a big hit. So GDP is expected to really drop in Australia. In China, the Caixin manufacturing PMI is also interesting. And in Germany, in Europe, the German manufacturing PMI, and in Great Britain as well. So lots of manufacturing PMI this week. And of course, the non-farm employment change just before the non-farm payrolls that are upcoming on Friday. So and we have another manufacturing PMI in the US. Those of you who are trading the Canadian dollar, pay attention to the crude oil inventories, which this piece of data affects the crude oil price, and this in turn affects the Canadian dollar price against other currencies. So pay attention to this. Thursday, we have retail sales in Australia and initial jobless claims in the US, which is, of course, a super important piece of data. And then on Friday, we have some PMIs, but we also have the non-farm payrolls, the biggest event every month, which makes the market super volatile, and the unemployment rate. So, you know, those of you who are not in the market, unless you're news traders, you know, be careful with entering just before this this data comes out, and be careful of too tight stop losses, and or you know, getting hit by spikes and widening spreads. So this is the these are the main economic events for this week. Again, Wednesday, very interesting with a non-farm employment change, with some manufacturing PMIs as well. And those of you trading Aussie, pay attention to the GDP data, and of course, non-farm payrolls. As for the dollar index, it's been going up, you know, still going up, but last week it made this doji candle. So we could see some reversal this week. Interesting to see, not necessarily, but it could bring the dollar down a little bit this week. We'll see the other majors and you know, analyze them against the dollar and see where they could head. But this doji candle is interesting. It's quite a big one. This is the weekly chart. As for the heat map, as you can see, the euro is pretty weak across the board, while the Aussie for now is relatively strong. It doesn't mean that it's very strong, but it's maybe a little bit stronger than other currencies which are weaker. The Canadian dollar is also relatively strong, and the yen is pretty weak as well. Okay, so just, you know, pay attention to the heat map. Of course, it changes, and you can always watch it also on the Trading Views website. We'll go and watch it just before the end of this session. Okay, so you can see the heat map. Let me share it again, just one sec. You can see the heat map here. Okay, the heat map is under Trading View, Markets, Currencies, and then you have heat map. Okay, so this updates all the time. Okay, let's go to MetaTrader and start analyzing the charts. One sec, please. Okay. So with MetaTrader, we have the euro dollar, which kind of completed a head and shoulders pattern in the last few weeks, and you can see it also maybe a little bit more clearly on the monthly chart. This is the left shoulder, the head, and pretty much the right shoulder. But yeah, the weekly chart is also a good one. Yeah, thanks, Abdulrahman. So this is a head and shoulders pattern which was completed. Look, when it first broke the neckline, it wasn't a perfect breakout, but eventually it did come down. Last week formed a pin bar, and we could see the euro dollar maybe starting to rise up again here. On Friday, it went up pretty nicely, and it could start going up either from around here, okay, previous support, resistance, and now support again, along with some moving averages serving as support. But it could also, if it goes lower, pay attention to this area as well. Okay, this could be another level of support. Of course, if it breaks below the previous low, it could continue all the way down, and the next the next demand zone is much lower. But again, these two lines here around 112.30 and 111.70 are pretty strong support levels. So just pay attention to them if you are short on euro dollar. Let's just go a little bit back. Okay, so you can see here 111.20 something. Okay, oh yeah, sorry, 111.70, and also again 112.30 is also a relatively strong level from previous weeks and months. So just be aware of these levels. Again, last week this pin bar could give us an attempt to the upside maybe later on this week, but don't just go long. Wait for some support levels around previous support areas, just like I mentioned, around here or around here, and preferably some sort of a reversal pattern, maybe even on the either on the hourly or the 4-hour chart. Okay, so that's for the euro dollar. The overall trend is still very bearish. Okay, and the next resistance is at the previous top here around 113.70, and of course if it continues even higher, the next resistance, well, it could find resistance anywhere around these moving averages, and of course around this level here, 115.25. It's pretty far away. Not sure it will make it all the way up there, but again, just be aware of these levels, because as the market gets more volatile, the ATR goes up, the average true range, and a daily candle can move dozens and even more than 100 pips a day, like here, or like here, this candle. So more than 100 pips, and then within a couple of days, it could just move 250 pips or 300 pips and reach previous resistance levels. Okay. Pound dollar. I spoke a lot about this blue line and about this level around here. So this blue line proved itself. I said last week, at the beginning of last week, that this blue line, which is sort of a neckline, but not really a neckline because this is not a head and shoulders, but sort of a neckline. After this candle here from 2 weeks ago, tried to go above and eventually closed again below this line, we had this sharp drop of pound dollar. Not only did it drop below this blue line, it also broke, well, below this level. It's not a one line level, but it is some sort of a level here, and it could continue much lower, not necessarily immediately, but as you can see here, it broke even below the previous low here on the daily chart, and for now it's not showing any power or any, well, the buyers are not showing any signs of strength, and it could continue further down. Those of you who are looking for opportunities to go short, I would recommend, well, you see here entry points around previous lows or previous highs, but I would even recommend looking for entry points around, let's see, where are the moving averages? Come on. For some reason, it's not showing. Not sure why. That's strange. Anyways, to look for entry points around previous support levels that are broken and turn into resistance. So, for example, if this area here is broken again, this level here, okay, we have support, we have resistance, we have support again. If the price closes below and retests it, it could give you an opportunity to go short. Of course, if it sits on top of this area and starts moving up, maybe you can look, especially if it's for a short-term long on short-term time frames. Just look for some sort of price action or reversal pattern of some sort. So that's for pound dollar, but again, the overall trend is to the downside. Do pay attention to this sort of like two spinning tops which could hint or could give us potential reversal. But again, for now, as of today, this candle, this daily candle, is not showing any sign of bulls coming in or taking the reins on this currency pair. Dollar yen, I spoke about this candle, this spinning top, sort of somewhere in between spinning top and doji candle from 2 weeks ago. I spoke about it last week, and I said this is not a good sign for the dollar yen. It could hint that sellers are coming. It did give sort of a false breakout because the trend is still bullish, and I said the weekly there were like sort of contradicting signs. Okay, the trend is definitely bullish, but on the other hand, sellers were coming in 2 weeks ago and definitely last week with a very strong shooting star candle. And again, it's, for me, still contradicting signs. On the one hand, it's still sitting on the 9 EMA on the weekly chart. So the trend is overall still very bullish. On the other hand, it's still coming from this supply zone, this big monthly supply zone. It's still giving us some bearish candles or reversal candles. But again, on the other hand, it's sitting on top of the 9 EMA, and for now, the moving average is holding it to the upside. So what I would suggest for those of you trading yen pairs, first of all, be aware that there hasn't been a decision yet, but this candle, this huge candle, okay, we have two sort of like bearish engulfing candles coming from a monthly supply zone. The month is ending tomorrow. Yeah, it's November. So tomorrow, the 30th, and then Thursday, December 1st, we'll know how this monthly candle will look like. If the dollar yen monthly candle ends up like this, sort of a spinning top on a monthly level, just below a monthly supply zone, this is a warning sign, and this could drive dollar yen all the way down very sharply. Okay, if it happens, by the way, we could maybe see a sharp drop in the markets as well, like the index markets, the stock markets, the indices, commodities, maybe, who knows? I don't know, maybe the new COVID variant will be found to be much more infectious or lethal or whatever, or maybe there will be an outbreak and the markets will drop and dollar yen will drop. Sometimes it's interesting, well, I ask myself at least, what's going to happen that will, in the event that what I'm expecting to see on the chart will indeed happen, okay? And if dollar yen drops like this after a spinning top candle, it will probably happen along with something big in the markets. And the markets will reflect something big in the world. So again, for now, all I can think of is the new COVID variant. But again, it's all speculation. I'm not trading by it. I'm waiting to see. I'm trading according to what I see on the chart, not according to what I'm expecting to see or what I, am hoping maybe to see. Just pay attention to the monthly candle on the dollar yen. Super interesting, especially because it's coming from a monthly supply zone. And this spinning top candle, I have, you can watch it on YouTube, a whole webinar just on the spinning top candle and the way to trade it. This could be followed by a very strong or sharp move. So that's for the dollar yen. On the other hand, the weekly chart still bullish, and you can see that here it's still, well, there's sort of like a an intermediate demand zone and this moving average. So for now, it could push it higher. On the other hand, we have these moving averages sitting on top. So yeah, Christian, I mean, definitely on the short term, you can still be bullish on dollar yen, and it could move higher. Just pay attention on the hourly chart, for example, to this area around here. Just pay attention to this area. We have the moving average. We have sort of a small supply zone, and definitely around this level here. Okay, we have sort of a support broken, retested, and then down again. So this area is also a potential resistance, and of course, this level around here. Okay, the bottom of the supply zone. Okay, the big supply zone on the monthly chart. The bottom of the supply zone, which was also previous support, and if it comes all the way up here, it could also turn to resistance. So lots of levels, each one with one's own time frames. Definitely on the shorter time frames, it could continue and remain bullish for quite a few pips. Here, maybe an evolving opportunity, breaking above this previous high, remaining above it, maybe going up, coming down to retest it along with the moving average, the 9 moving average, for example. You have confluence of signals to support levels, the static support level and the dynamic support level of the moving average, both supporting and pushing the dollar yen higher. That's an option or a trade set up for long. Just wait for the signals to give you this opportunity. And on H4, you're looking for 114 as a strong bearish turnover. 114, well, that's not too far away. Yeah, could be. I mean, as I said, yeah, there's also sort of like support and previous support and resistance. Just be aware of these various levels, and 114 is right around the base here. That could also serve as a resistance. As I mentioned, you have some sort of a supply zone all over this area, and especially at this point. All right, so that's for dollar yen. Just to finalize or to sum it up, just be aware of this monthly candle and how it ends in in a day and a half. If it ends as a spinning top, we could see some strong moves to the downside from below, from under this, or from this supply zone. It doesn't happen immediately, or doesn't have to happen immediately. It can even push higher. It can even cross above this supply zone, or sorry, above this doji or spinning top candle before going down. Anything could happen, just like Last week, it crossed above this sort of spinning top or doji candle, but eventually dropped very sharply down within 1 day. So being aware of these candle patterns is critical. Dollar Swiss, this trend line is holding on the weekly chart. This trend line is holding the price to the upside. On the other hand, this supply zone was touched last week, pretty much to the pips, or to the pip, and the dollar Swiss dropped from there. So the Swiss currency is relatively strong, well, relatively to other currencies. But as I always say in the last few weeks, the overall trend is not very clear. Maybe what we have here is sort of a compression to the upside. The dollar Swiss is compressing into the supply zone, eventually with a breakout to the downside. But again, that's only a maybe. It could also continue higher. Just trade what you see on the chart, and this is a weekly chart, so definitely it's just for reviewing the long-term trends and potential moves. Well, now just below this supply zone, we also have a supply zone around here at the base of this huge daily candle. But on the daily or lower than that, we don't have any clear trend, even though as long as it remains on the short time frame, as long as it remains below these moving averages, it could continue even lower. Just pay attention to this area around here, or this sort of like zone around here. If you're going short, or if you're looking to go long, and if it arrives or reaches this area. Okay, dollar CAD moved sharply higher last week, again in unison with crude oil that dropped in light of the new COVID variant outbreak. So when crude oil drops, Canadian dollar drops, and in this case, the US dollar against the Canadian dollar goes higher. So dollar CAD went up, along with a sharp drop in crude oil. The EMAs I'm using are all applied to close. These are all exponential moving averages, Samuel, 9, 21, and 50. All applied to close. So dollar CAD is overall bullish at the moment on the daily chart. See how nicely it kind of compressed into the 9 EMA. I spoke about this pattern many times. You can even watch it on one of my webinars on our YouTube channel. This sort of reversal pattern, the reversal formation, once the price kind of starts crossing above the moving averages cross each other, the price comes down, retests the moving average or the moving averages as they cross each other, and continues up, continues higher. It happens time and again on the daily chart, sometimes on the weekly chart. It's really a beautiful reversal pattern that gives a great opportunity to go with the trend, with clear places to place a stop loss, or clear levels for stop loss, and in relatively a safe setup to go long or short. So yeah, for example, yeah, you can see it again here, for example, crossing and retesting and going up higher, or well, here it didn't really, well, it broke, but here it was more gradual. Here, for example, it didn't retest the crossing of the moving averages, and the trend really didn't really evolve. Anyways, just you can watch the webinar. This was a classic reversal. So dollar CAD could continue higher, even though it's kind of losing momentum at the moment. but the strongest level is around here, strong sort of supply or resistance level. And but as you can see on the weekly chart, it is forming some sort of a reversal pattern, okay, on the weekly chart, just like I showed you on the daily chart. So what it could do, it could continue a little bit higher or sideways as the moving averages cross, come down to retest the moving averages, and then continue to the upside. And I remind you that dollar CAD overall is coming from a monthly demand zone, and now could be on the monthly chart, could be forming sort of a confirmation or price action in the form of an engulfing bullish candle. But what I would like to see in order for the dollar CAD to continue higher is to move above these two moving averages and move above this area, as I showed you here, this resistance area or demand area. Okay, so just again, a potential move, just one potential move doesn't mean it will necessarily happen, is for the price to go up, come down, retest the moving averages as they cross each other, like something like this, and then continue higher. Okay, that's one potential move, but that's on the weekly chart. It could take weeks and weeks. On the shorter time frame, the trend is pretty bullish, and you can see here it could be testing previous highs or previous close levels, and continue higher from here. But if it breaks this level, just watch the areas around here. First area around here, and of course second area around this, pretty much here. Okay, but it could find support and continue from here all the way up to this supply zone, and then maybe only then maybe do a retest. Aussie dollar, super interesting. I put this icon here, and this comes in unison with what I said about dollar yen if and when it breaks to the downside. And you know, after last week's sort of shooting star, could be, you know, that Aussie dollar is forming potentially a or maybe completing a head and shoulders pattern. Remember, I showed you on the euro dollar that we had a big head and shoulders pattern, or sort of a head and shoulders pattern, not a perfect one, not a very pretty one, maybe like this, maybe like this, not sure exactly. It's not a perfect one. On the other hand, Aussie dollar is showing sort of a perfect head and shoulders pattern on the weekly chart, and this could, you know, give you hundreds of pips on the short side. It doesn't mean you should enter right now, but you know, from what I've drawn, and again, it's not necessarily you know, exact. It could, you know, it could be like something like this, and then it hasn't broken, or something similar. But it looks pretty much like, you know, it broke below this line. Now we have to look at it here. Now we have to break below this low. Okay, this is what I really would like to see. It's not these low. That's why the neckline is diagonal, not horizontal. But still, I would prefer seeing Aussie dollar breaking below this previous low in order to get a better confirmation. And as always, it's a weekly chart. It could take a few more days. It could break out and break up again, and only then continue to the downside. But this is not something you can ignore. Anyone trading Aussie dollar or any Aussie pair should be aware of the fact that the Australian dollar could drop sharply in the coming weeks and months. And if this happens, also, just like I said on dollar yen, it could suggest maybe something big in the markets. just like in 2008, when the markets dropped by like 50%, Aussie dollar also dropped very, very sharply, as you can see here. Okay, this was a huge drop. Look at this big shooting star candle after this sort of hesitation candle, a big shooting engulfing candle coming or followed by 3 huge monthly candles with over 3,700 pips in 3 months. Okay, so over 1,000 pips a month in average, on average. That's huge. But that was 2008. Now on this weekly chart, if we complete this head and shoulders pattern, you know, very interesting to see how it will evolve, and just be careful. On the daily chart, we could find some resistance if it comes up, if it goes up, find some resistance at this bottom, okay, this previous low. But we could also, if it decides to retest much more than that, it could go even all the way up here, maybe to retest this previous trend line, which was broken, and only then continue to the downside. I think I spoke last week about this daily candle, this shooting star after this trend line was broken and then retested and eventually closed below. The drop was pretty much expected. I mean, I think that was yeah. I mean, that was the beginning of the week. I spoke about it, and look at this beautiful move to the downside. So the retest is, I mean, what I'm waiting to see is some confirmation, because I never know when the retest will end. But for example, if it goes, let's say, to this level, okay, and forms sort of like a hesitation candles or reversal candles, if it comes to this line where it dropped before, along with this moving average, and gives me some reversal candle or continuation candle in this case. So I'm waiting to see, like, as I always call it, the confluence of signals, a retest of some sort of a resistance level in this case, like previous resistance, maybe a dynamic resistance from a moving average, and then some sort of a confirmation candle. It could be a doji, a spinning top, or an engulfing candle. Usually it's like a small doji or spinning top or something like that to give me the signal to continue or to take the continuation of the trend. So for me, the following weeks are definitely an opportunity to go short on Aussie dollar and on other pairs. For example, Aussie CAD. Aussie CAD broke below previous lows. This is the weekly chart. Okay, you can see here, this low, it closed below it. Now it's retesting it. It doesn't mean it couldn't close above it on the daily chart, but on the weekly chart, I would want to see or expect to see at least the weekly candle remaining below this level in order to go short. But Aussie CAD, for example, is in an interesting level, and look how after months of sort of compressing or consolidating around this level, it could break down and continue lower. The sentiment is definitely to the downside. You can see it on the moving averages. You can see it with the mass of black candles or bearish candles. Just as an example, Aussie Yen as well. Let's have a look here. Aussie Yen. So look at this massive drop on Aussie Yen, and on the weekly chart, okay, Aussie Yen could be forming some sort of a double top. And Aussie Yen, again, this is the trend line that if broken, could push this pair much lower. The overall trend on the daily chart is definitely to the downside. Again, where to enter? Either at previous levels with some reversal candle on the daily, on the H4 charts, and of course, previous lows are even stronger here or here. But wait for some confluence. For example, here you have previous high, and you have this moving average, both serving as supply or resistance. So that's for Aussie dollar. Again, remember this pattern, pay attention to it. Super, super interesting. Kiwi dollar as well, very, very weak. Here, again, well, again, the line could be drawn above, this previous high, could be drawn here, somewhere in between. This is a zone that could serve as support, so it's not too far away. But look how this demand zone has been completely consumed without any problem, which indicates or implies how weak the New Zealand dollar is, and the pair, the Kiwi dollar, is super weak. And I would also look for short opportunities on the Kiwi dollar as well, just like on Aussie dollar. On shorter time frames, here an example. Okay, see how the moving average is, how the price compresses into the moving average, forms sort of like hesitation or weakness candles, and continues to the downside. And for now, it's not showing, at least in the price, it's not showing any signs of buyers coming in. However, I do see some bullish divergence in stochastic. So be careful. I mean, I wouldn't enter short just here. Either I would wait for a breakout of this previous breakout of this level and a retest before entering short. Yeah, I mean, entering right here wouldn't be a wise thing at the support level. So wait for a breakout and a retest. And this sort of like, well, not sort of, it's a bullish divergence, could imply some slowdown in the downtrend. But the overall trend is pretty weak. So if this level is broken to the downside, definitely more downside for Kiwi dollar. If it comes, well, if it does come all the way from here, starting to go up, it has plenty of room for retest and or resistance around previous lows, moving averages. The trend hasn't ended yet. Okay, maybe it has just begun. So that's Kiwi dollar along with Aussie dollar. Euro pound, I spoke about it. Seems like it's compressing into this demand zone. Okay, maybe hasn't touched it quite yet. Could make another move to the downside, but already showing some bullish divergence. But it's compressing into this demand zone, and we could definitely see an upward move on euro pound. Look at this candle, the monthly candle. If it ends in the form of sort of a spinning top or a doji candle above this demand zone or support area, it could very potentially start moving this pair to the upside. This could be the signal for a reversal. Again, this is the monthly chart, so don't trade just off it. Wait for some, some reversal or some retracement to previous support areas, for example, around here. Okay, you have support, you have some sort of a breakout of retest, resistance, and then a breakout. And then if it comes down here, okay, if it comes down here, this could give you a an area to enter with a relatively short or a small stop loss and a better better confirmation or confidence in the move. And the other thing I wanted to say here, that again, it's, you see this daily candle, sort of a reversal or a hesitation candle. So if it finishes like this, maybe we could see a move to the downside. But anyways, those of you who are trading euro pound, just wait for some area of support to enter. Maybe a little bit more accurate is around here. As you can see, it's already forming some sort of a retest of the moving averages. Maybe it will continue all the way from here. Next or strongest resistance, the first resistance is around here. So, but again, on the long term, we have definitely a sort of a compression into the demand zone with a potential move to the upside, especially if this monthly candle forms sort of a spinning top or doji candle. All right, let's have a look at a few yen pairs. Interesting, lots of interesting moves last week. Strong moves after the dollar yen dropped along with the other majors. So as you can see, euro yen is now on the weekly chart is below the 50 EMA, and the moving averages could, cross each other in a week or two, and continue pushing the euro yen to the downside. It pierced through the previous lows, but it hasn't closed below them yet. We could see an upward move. It doesn't necessarily mean that it will continue dropping immediately. It doesn't, I mean, anything could happen. It could turn around from here and continue all the way to the upside, of course. But for now, the sentiment is pretty bearish. But again, this daily candle, if it ends as sort of a pin bar, a doji or whatever, we could see a push to the upside, especially as you can see here, we have some sort of a bullish divergence. So again, we could see a move to the upside, a retest of previous highs, a retest of previous resistance levels before continuing to the downside. Again, for me on the weekly chart, the sentiment for now is pretty bearish, but it doesn't necessarily mean it will move all the way down directly. It could give us a few candles to the upside on the daily or even on the weekly chart before continuing lower, if it eventually continues lower. These moving averages can definitely serve as resistance, so pay attention to them as well. It could reach this moving average and go down, or this moving average and go down, along with previous resistance levels, like here, for example. Okay, all these levels here. So that's for euro yen. Wait, now let's Swiss yen is much stronger, and I mentioned it last week, much stronger than other pairs because the Swiss franc is relatively strong. So it's still sitting on top of this 9 EMA on the weekly chart. It made this doji candle, which could hint or suggest more move to the downside from sellers. Thanks, Antonio. Thank you. But it could also hint or suggest a reversal, sort of like a well, I don't remember the name of the pattern, but sort of like the opposite of a hanging man. Okay, it's sort of like a dragonfly doji at the bottom of a down move, and then a continuation to the upside. See this push higher. So So the Swiss franc is, as I've shown you on dollar Swiss, it's still relatively strong. And on the daily chart, it's stuck. It's been stuck in between these moving averages for the last few days. As I said last week, I'm waiting to see to which side it will eventually choose, whether to the downside or to the upside. But it's stuck in a range for the last few days. Again, the Swiss franc is not an easy currency to trade with all its peers. If this daily candle closes as a doji or pin bar, we could see some more move to the upside. But again, be careful. We are in a range. Okay, the trend is not clear at the moment. Pound yen has confused lots of traders last week because it for a few days last week it for most of the week last week it ranged or moved sideways before it broke to the downside. The immediate resistance area is around here, the bottom of this green rectangle around here. For now, it's still stuck below the 9 EMA. If it breaks above this 20 or 21 EMA, along with this these previous lows or this resistance line now, could give us an opportunity to the downside. But as you can see, it hasn't broken any range yet. It made a higher high, but the trend is not super clear. And on the monthly chart, on the one hand, it's above this 9 EMA. On the other hand, we do have some sort of a bearish divergence, and it's sort of like a dark cloud cover relatively to the monthly candle of November. So the sentiment is not super clear. Just be careful with this pair. For now, it's pretty confusing. Okay, not a clear trend to the on the midterm. But if it goes higher, be very careful, or pay attention to this level. It could give you an opportunity to go short. If it crosses and closes above it, it could continue even higher. I prefer, Antonio, trading off of the 4-hour chart, maybe even the hourly chart, but I always take my trades according to what I see mostly on the daily chart. The weekly chart just helps me expect the movements, okay, or expect the unexpected in a way. So, for example, dollar yen. Last week, I told everyone, listen, dollar yen could, make a move to the downside. Be careful because of this candle. So I was expecting more of a short side on yen pairs rather than long, going long. So I watch or hear, for example, the Aussie dollar. For me, seeing this head and shoulders pattern, I was expecting more downside on Aussie dollar, and especially since the trend on the daily chart was to the downside, was very bearish, I was looking for opportunities to go short on Aussie dollar last week. For example, around moving averages with reversal candles, or here you see the consolidation to the downside on Aussie dollar. So even if I'm trading, even if I'm scalping or taking intraday trades, if I know that the weekly chart is showing me a huge head and shoulders pattern, the daily chart is super bearish, okay, and the hourly chart is showing me, for example, consolidation. Let's draw it with this here. Consolidation, for example, here, okay, consolidation into the moving averages, then I could, look for the opportunity to go short, for example, once this trend line is broken on the 15-minute chart. Okay, I don't trade Aussie dollar so much, especially not intraday, because most of the moves happen at nighttime for me. But this is how I do it from top down. Look at the major trends, look at the H4, H1 trends, and then maybe look for entry points. If I'm trading intraday, look for these entry points according to the to what I saw on the higher time frames. And of course, well, many times I just, if I see a strong trend on the daily chart, if I see this spinning, this shooting star after a trend line has been broken and retested and eventually confirmed, for me, it's just setting, for example, sell stops below this level and, letting the price open the sell stops, the pending orders, without worrying too much about, intraday trends, because I know that the long-term trend, the daily trend, is very strong to the downside. So that's it. Kiwi Yen, that was an amazing move last week, and we took here some trades in our Nostro portfolio, in our own company's portfolio on Kiwi Yen. Beautiful, beautiful. Look how this trend line broke to the downside without even retesting it. You can see that it's just, going with the trend is so much easier. I saw traders, for some reason, I don't know why, going long on various pairs, even though the entire market was going short. It's like I say, trying to catch a falling knife. Don't do it. Go with the trend. It's not only, there's a reason they say the trend is your friend, and Kiwi Yen is definitely in a very bearish trend. It could find some support around here, this area of demand. It could retest previous high. It doesn't necessarily mean it will move directly lower, but the overall trend is quite bearish. You can see here on the weekly chart, it found some support on the 50 EMA. Interesting. Not sure it will stop here. Remains to yet to be seen. But it could find some demand in some power around here. One thing before, I'll resend the. Here is the heat map. One thing before we finish, Euro Swiss. Again, I'm warning you, pay attention. Euro Swiss is going lower. It's still going lower, and it's going into the risk zone. Okay, these are the areas where the Swiss National Bank intervened in the past. You can see it here. This huge candle wick. This area around here, it's going there. It's going there, and if Euro Swiss continues lower, if it breaks below this area, I will not be surprised if the Swiss National Bank intervenes. So just just pay attention. Very, very, very dangerous for those of you who are going, or for those of you who are trading the Swiss currency. So let's go over Aussie Kiwi, and then we'll go to TradingView and go over WTI, the crude oil. So just very quickly, Aussie Kiwi. So Aussie Kiwi, well, it's a hard pair to trade because many times, it's ranging to the sideways, obviously, because these currencies are sort of like sister or brother currencies. You can see that, well, we could see an upward move on Aussie Kiwi because of this formation. First of all, it's within some sort of a demand zone, even though a big one. Okay, and we can see another demand zone around here. We see an engulfing bullish candle last week. And on the monthly chart, this pattern is interesting. I mean, it came down, formed this sort of an outside candle, started going higher, showing like that the buyers were coming in, eventually dropped lower to the demand zone on the weekly chart. And now the monthly chart is giving us some sort of a pin bar or a push from the buyers. We could, and especially if this candle closes as a bullish candle, maybe with a pin bar with a bullish close, we could definitely see Aussie Kiwi pushing to the upside. So, so just again, this is the long term. Obviously, on the short term, you can see this reversal on the daily chart, the reversal pattern I spoke about or mentioned earlier, where the price crosses through the moving averages, retests them as the moving averages cross each other. So there's a retest of both the short and the long moving average. We have here a daily engulfing bullish candle. So for me, most of the signs are definitely bullish for this pair to the upside. Okay, doesn't necessarily mean it will go directly up. Obviously, you have some resistance areas around here. Okay, previous support, resistance, could be a resistance again. But if it crosses above this line, more room to the upside. Of course, with other resistance or supply zones higher, but overall, for me, the formation is more bullish than bearish. Okay, that's my analysis for Aussie Kiwi. And now let's go to to crude oil. Let me just share my screen. And heatmap link, I sent it just like a few messages above, Samuel. It's right above you. And here it is again. So let me just share trading view again. Okay, so crude oil crude oil, you see here, by the way, this spinning top candle. Okay, I mentioned it when I spoke about the dollar yen on the monthly chart. So see how the spinning top candle can be an amazing sign for a reversal. Crude oil came all the way down to this 15 EMA to previous support. Started with a gap up. The immediate resistance is around 74. Okay, previous resistance here, and then support around here. But of course, the stronger level is around 77, more or less. Okay, previous resistance, and of course the area of 78. The overall trend for now, at least for now, let's have a look at the monthly candle. So the overall trend, I think, is still bullish, but we have this bearish engulfing candle on the monthly chart. The month hasn't ended yet, but still, it looks more bearish than bullish. And crude oil could go lower, maybe even to retest this long-term trend line here on the monthly chart. Okay, a very, very multi-year trend line that has been breached to the upside, retested. You can see it here, retested, and the price continued higher. Maybe it will retest it again. Okay, if it goes all the way down here to 53, 54, maybe it's, you know, part of the you know, this outbreak of COVID, whatever, Omicron, before continuing higher. So who knows? But this bearish candle could suggest more a potential move to the downside, even though you can see that this blue line, it's still sitting on top of the 9 EMA, which could hold the price and continue supporting it. As drawn here, the major supply zone is around 102 or so. I don't really want to think about oil prices or gas prices for cars if the price goes all the way up there. It's almost a 50% move to the upside. Anyways, that's it for this week. Thank you for joining me. Pay attention, be careful of the news, especially the non-farm payrolls on Friday, but also lots of news on Tuesday and Wednesday, definitely. And that's it. So trade well. Thank you for joining me. Crypto, well, Samuel, yeah, but maybe next time. I mean, we're already past the time, but you know what? Maybe just let's have a quick look at Bitcoin. Let's have a look very, very quickly. Well, Bitcoin, as you can see here, is making sort of a, well, not a double top exactly, but sort of a double top, maybe with a bearish divergence between these two tops. Let's see how this month ends, but it could end some sort of like a spinning top, or like you can see here, by the way, look at this beautiful spinning top and the drop that came afterwards, like a 50% drop from Bitcoin. On the daily chart, the trend for now, well, it looks like it's compressing into some sort of a, you see here, this sort of a wait, yeah, sort of like this support area around here. But if it drops below 53 or so, 53, 52, we could see a downward move even lower. For now, the 21 EMA is holding it, but it could move lower. I mean, especially if the rest of the market goes down, we could see further move to the downside on Bitcoin. This is an ugly spinning top, or a beautiful spinning top, depends if you're holding Ethereum or not. This monthly candle on Ethereum is quite ominous, and we could see a further down, or now a big drop, just like we saw on Bitcoin a few months ago here. So this could come to Ethereum next month. Who knows? Especially, and you can watch the webinar, especially when the spinning top is far away from the moving average. Okay, when it's far away from the moving average, it's more ominous than if it's relatively close to the moving average. Okay, last week formed this this spinning top, but on top of the moving average. So basically, it could give us continuation to the upside. But if it doesn't push the price higher, it's even more ominous. It's even more bad news for Ethereum. And again, if it ends up like this, it doesn't necessarily mean it will drop immediately. It could move higher. It could move to this previous high. It could move even higher before dropping lower. If any, it doesn't even have to drop lower. This is a beautiful or an ugly sort of a shooting star. Okay, not a good sign for Litecoin. So maybe we could see a drop here as well. Cardano has been moving lower. Looks pretty bearish still. Bearish. It is on top of the. It's right on top of this. Sorry, wait. Where it is, right on top of this demand zone, but hasn't touched it yet. This is quite a strong demand zone, and maybe, well, if I'm looking at the weekly chart, this area, or yeah, this entire area could give an opportunity to start accumulating Cardano if it doesn't break all the way down through this demand zone. Okay, if a sharp move comes for crypto market. Not sure what other currencies. I mean, there are like 6,000 currencies or pairs in the crypto market, but maybe these are the main ones for now. I don't want to talk about the Dogecoin or whatever shit coins, other shit coins, but I hope it gave you some maybe signs about what could come next for the cryptocurrencies in the coming month or two. Interesting. This is an interesting candle. This is an interesting candle. Very interesting. Pay attention. All right. You're welcome, Samuel. Thank you, everyone, for joining me today. Trade well. Be patient. Take it one trade at a time. Don't try to make a home run. No one becomes a millionaire from one trade. So just take it slowly, and we're always here for you. Thank you again. May the gods of pips be with you. Have a beautiful and successful week. Thanks a lot.